Good morning.
Good morning, sir.
Welcome back to Forex Focus here on Tasty
Left
Live.
you hanging there. I kind of gave you the eyes I was going to do it, then I looked away.
I know. It's all right. I'll step up.
It's
Happy Thursday.
the amazing new background. It's eye-catching.
Yeah.
Look at you.
Booyah. That's really nice. Am I supposed to be like really low? Can we all
Or we
see
could
it?
be tastyfx. It's either one. No,
Yeah.
it
Love
works.
It. Great job to our production team.
Absolutely.
Getting that up. This
Look
is
at that. Customizing this out.
so fun.
Yeah, very good. Look at you on inauguration day for the new backdrop.
Why, thank you.
Well,
Glad to be here.
You're the A talent now.
All right.
I mean, I don't know. There used to be a little redheaded guy, but I don't even know what happened to him. So
Yeah, do you want me to start wearing hats?
I know,
That
and
make you
most
feel more
importantly,
comfortable?
don't wear Lululemon pants. That would
Okay.
be-
I mean, my Lululemon pants have buttons.
I was going
Is
to say,
that okay?
yes,
Okay.
because they're big boy pants,
Yeah,
not string pants.
drawstring.
Not string pants. So, oh, poor guys.
What's
What is
new
it,
today,
4,000
Peter?
miles away, and we can't pick on them. I don't know. A lot of stuff going on today. A lot of movement. Interesting to see the. Again, we're going through the. I honestly thought the tariff piece was getting old,
I know.
and it is old.
It's old, but still.
It definitely, but it's interesting to see where they announced tariffs yesterday, and you saw Euro trade lower, Kiwi and Canada get hit, and all of a sudden buyers emerge right
Yeah.
away. I mean, they didn't spend more than 20 minutes down there,
Right.
and kind of stayed quiet through Asia. And the minute London came in, they're selling dollars, buying FX. So, and U.S. equities actually had a pretty down day,
Yeah.
traded a little bit higher, and they're getting sold again too. So I think everybody in gold, lifetime highs. We're up almost $45 in gold.
Insane.
They set at 350. I think we printed. Yeah, we're sitting at 390 right now. So, and no reprieve once we went through the highs, and that all didn't happen till about 4:30, 4 o'clock this morning. We were up maybe
interesting.
$5-6, 360, 362, and just the wall of buying came out. And this is the same thing we've talked about yesterday a little bit, where you get to new highs, and who are the participants? Well, you've got momentum guys who want to buy. The more it goes, the more they want to
Yeah.
buy. And then you also have hedgers and users who now are having to protect their need for the underlying. And then everybody who's either short premium or short the underlying put to a difficult choice. And the interesting thing is we got up to 3,095, I'm sorry. And we've pulled back about $5 here, but we haven't gone 3,090, 3,050. So, and it seems to be, you never quite know where
Yeah.
the stop is, but it seems like there's a fair amount of gas behind it. So, is that helping some of the currencies today? I think maybe a little bit, but I think it's also that idea of, I mean, gold's up, U.S. equities are getting sold right now, and the whole time, the one thing that hasn't changed yesterday and today was continued selling in treasuries. So yields, while not ripping higher,
Yeah.
are marching higher. It's not helping the yen. Yen tried a little bit of a rally yesterday and then kind of got squashed. So dollar yen higher again, while everything else is a little bit lower. Dollar yen is higher, yen is lower, while the rest of the currencies are a little bit higher. So it's been kind of an interesting. It feels a little risk off, but
Right.
Nothing's getting that far away. But risk off in a different way, because every other risk off time we've seen is dollar buying. I'm going
Yeah.
to the safe haven. Not so much. And my takeaway is interesting is that's not like we're not seeing Euro not do its usual thing, which is sell off with risk off at 102 or 103. We're seeing it at 108.
Right.
And we're seeing all these currencies, cable 129.35, holding on dollar selling at the higher end of the recent range, which is a little bit different behavior. So, you put that context in is we know we can't control the news cycle, and whether or not they're going to, I'm not going to say the L word. I refuse to get sucked into that. But April 2nd.
It's coming, no matter what.
Again, I just, stuff
It will
like this
be
is,
Liberation Day.
you had to do it.
Oh, yeah.
Whatever happens April 2nd, I mean, if we see anything, nothing sticks. And it's become a clumsy cudgel because it's not getting the responses. It's getting basically, Mark Carney in Canada is like, okay, let's go at it. I'm going to borrow a bunch of money and spend $2 billion to ensure domestic production. They're not rolling over in the same way that they did. Now, depending on the country and how far they fight, we'll see. But, this Germany exports a lot of autos to the U.S. The euro reacted to this by trading lower on that news. Well, it's going to be a little bit more expensive to get, cars not made in the U.S. here, and immediately discounted it. So with the euro rallying back, and that's not the euro, like I said, rallying at low levels. It's high levels. So there's a lot to parse through here as we're, rolling into the end of the week.
Do you think that there's some weekend risk with this? April 2nd, that's what? Is that Wednesday?
Tuesday. Wednesday.
I think it's Wednesday.
Yeah,
so is there still room for negotiation? Could things shake out over the weekend? Or do you think this one is one of the most telegraphed so far and it should be pretty cut and dry?
I think that is there weekend risk that they could take them off, put them on? Yes. I think the market, whether it's equities or anything, is getting tired of it because it is, again, making things. I think the market's telling us right now with the reaction from U.S. equity markets yesterday was the minute this was talked about, NASDAQ was down, 450 points or more at the end of the day. And it was one way. There was no bounce anywhere along the way. SPOOs down, not quite as much, but I think they'll end up being the one that gets hit hard today. I think everybody is kind of tired of. We're not willing to see if these are temporary or not. We're going to take stuff off the table. We got a good bounce. We got a bounce last week and the start of this week. Early into equities. If that turns out to be it was a 3-day rally, and that was the best we could do. Really, a 2-day rally, and that was the best we could do. I think it speaks to maybe market structure changing a little bit there, and the one piece that's unrelenting is the interest rate piece. We're almost back down to 115 in bonds, which, again, we were flirting with 120. We're back there. And it's not just the long end and the short end. It's all the pieces of the curve moving higher. So you would think that, because we always talk about, well, interest rates are higher in the U.S. That's good for the dollar. Not so much this time. So there's bigger things at play.
Not really, but if we pull up the platform here, you bring up a good point in that it's funny, earlier this week we were talking about, I made some slides on flight to qualities, traditional safe haven currencies, and the chance that relationship is kind of breaking down. And we've seen it play out almost immediately, taking a look first at this dollar-yen market, because you're absolutely right. We had that pretty strong sell-off in stocks, NASDAQ leading yesterday, and did not see the same thing as much in a bid in the yen, and way more reacting to U.S. rates as we had
You're absolutely right. Bonds down a full point this morning, and the yen getting absolutely. It's not the ripping rally to the upside, but there is no downtick to it. So,
a good range yesterday during the U.S. session, but by no means any strong continued down move.
No.
Stayed in there, and as soon as Asia came in, really picked it up.
Right, and that's when the initial note bond sign. I mean, by 8 o'clock our time, bonds were down 10, 12, 15 points, half a point. They're down a full point, and that continues. So I think our takeaways practically is we know it's not perfectly correlated, but if I'm trading dollar yen, I'm not listening to the tariff stuff. I'm looking at U.S. rates.
And we had what, a 5-year auction yesterday?
Yeah.
Is that mainly what this is on? I saw that there was some weak demand
They always
there.
talk. Again, the auction comes off, and they auction at noon our time, and they look at how many non-competitive bids, which are people
Right.
like, I just want to buy the issuance.
Regardless
I don't care what
of
I
the
pay.
yield.
But the bulk of it is taken down by dealers who put bids in, and it's how many bids they have to go through. Is there what they call a tail? In other words, they had to go through multiple bids to sell it. And I think this
their
one,
whole block, right? Yeah.
right, rather than everybody paying through the estimated price,
Yep.
which is called, they stopped through. In other words, there was so much demand, they could sell. They got a better price for them. This was not the case. I think, again, when you look at 5 years, if they pay through a lot on a 30-year, that's bad, or a 10-year. 5 years or 7 years, not so much, and they don't sell as much of that. So I think any one auction doesn't tell us. There's always this thing. There's this huge amount of borrowing they're going to have to do coming out. Yeah, we're at 6% debt to GDP ratio. It would be great if we were back at 4. We're probably going to 7 if they pass this tax bill.
Uh-oh.
What does that mean? They're going to have to borrow more. Who's going to step up and buy it? Well, there's people at what price level. So
Gotcha.
I think there's positioning around that auction, and
Yeah.
if it doesn't work out, the hedgers take it off. But that noise is long gone. So
Gotcha.
I don't.
So
put
it's more
too
just
much.
a reading the scene.
Yeah,
and
I
selling
don't put
bonds.
too much credence into. We probably got a reflexive move in the tens off of that auction announcement whenever they put that out after 12
Yeah.
o'clock. But it's really the quarterly refundings that are a little bit bigger. But again, that is an opportunity for movement. Don't guess that, well, they're going to have to borrow all this money, so all these auctions are going to be horrible. The market's going to tell you that. And the fact that what will be interesting is if this thought about borrowing more money is real, if we're below 112 or 110 in the bonds, then there's some thought. And now we're going through the whole dynamic. We're getting to levels we haven't seen in a long time. The market will get more elastic. IV rank and volatility will expand. And then you're going to have to be more mindful of the ranges you trade, just like we talked about here.
Right.
So same thing there too. It's
Interesting.
marching towards the downside. It doesn't make again, if we were in, this Ukraine thing isn't getting good, and the Houthis are now shooting missiles at Israel this morning, and that's why gold's up $45. What about the flight to quality of U.S. bonds? That's not working out.
Right.
So you don't argue that, well, the bond should do this. You don't
Yeah.
ever go down that road. Just go down the road of, well, it's not, other things are driving it right now. And I think when we look at yen, we know what's driving it right now, which is U.S. rates. So if we see U.S. rates if bonds go through one, where are we right now? We're now 115.10 in the Junes, down a full point. If we see 114 or 113 and a half, that's near those lows again.
Gotcha.
I wouldn't be surprised if we see dollar yen back to 155.
Interesting.
So we'll see.
Speaking of momentum in bonds, do you want to get back into the
Yes,
slides?
let's do that, because
Let's go over to
those
the
slides were
slides.
great. And we're talking, again, Glenn's put together some great content around indicators. And depending on the trader you talk to, they're all useless. You should be open to looking at what works for you as support for your risk management and trading style, whether it's flipping trades every 5 minutes, or I'm a swing trader where I trade trades for multiple days, or I'm a long-term strategic trader. All of these are indicators and moving averages we talked about yesterday. They're all tools to help you better make disciplined decision-making. What they shouldn't be is
A crutch.
they shouldn't be tool. And this is where I've seen technical analysis go wrong, when it's a tool to obfuscate decision making away from the trader and to the line. Well, the line says the market should
Right.
be. When you're doing that, you've handed over your decision making to a line. Don't do that. But these are great, and let's go through some of these because it was a great walkthrough.
Let's take it from the top. So top momentum indicators for Forex trading, as you touched on, indicators very popular for Forex trading for a handful of reasons. As we compare it to other asset classes, Forex stands out because of its 24-hour market flow, first and foremost. So all of these momentum indicators are really just mathematical calculations to try and analyze an asset's price movement, the speed of it, and if that speed is increasing, decreasing, along with the magnitude. So really getting a gauge on how markets are reacting. And this is important because when you have an asset that trades 24 hours,
Right.
you have no gaps, and stocks can be subject to a lot of gaps just because of the U.S. trading session, whereas Forex you get to access them 24/5, and that creates prints and smooth moves that a lot of these indicators can track better. Secondly, institutional dominance. You have a lot of big players in this space, as Pete, you know best, but you have a lot of people using these products, these rates, for real reasons, a lot more than a retail speculation, and bigger than one company. It's global institutions, countries, and companies hedging their risks, and perhaps needing to step in when things start to move, engage more when things start to move, and that can lead to more persistent trends as prices react. And lastly here, highly correlated markets. Here we're looking at all dollar pairs,
Right.
a lot to look at. If you don't have the great memory of the great Tom Sosnoff, then this is a lot to look at, and finding potential opportunities based on something you've put together with a momentum indicator just to check it out when something is signaling you can remove a lot of the noise here across highly correlated countries' currencies like the euro and the pound, Australian dollar, New Zealand dollar. So that's the backdrop, right?
Yeah. Again, all we're doing is, and charts are great tools to historically see where prices have been. It's no necessary prediction of where prices are going. We know markets price efficiently. But when we talk about ranges and uncertainty and participants coming in at new ranges, that's all great. And these indicators all help you determine what market structure looks like. They don't make decisions for you,
Right.
but they help you make better decisions. And again, you can put enough indicators on there to paralyze yourself.
Definitely.
That's not what you want to do. But this is a good exercise. And for the reasons you highlighted is that, again, when you have 12 hours of the day, no data, it can look a little hinky.
Right.
Here you've got a continuous stream of efficiently priced markets. And that, if you're going to use some of these things, probably lends himself best to it. So go through what we've got.
Yeah, so first we've got moving averages. These just, exactly as they sound, average the prices over a period of time. And you can do this over multiple time periods. And that's really what a lot of people use, is reacting to how different time periods averages relate to each other. So here we're looking at daily chart, and we have the 20-day, 50-day, and 200-day moving averages. And you can see when these lines start to cross, that can give you more of a clearer sense of the direction these prices have traveled, and potentially opportunities for where they'll travel in the future. So a very popular one is the cross between the 50-day and the 200-day, as we see on the left here. That this one, the 50-day, moving below the 200-day, would speak to continued downward momentum. And then you have some other examples here with other lines crossing that would speak to momentum to the upside. So this one is, again, goes back to the 24-hour, I think is the biggest Forex advantage here is because you're getting no real blips in prices. And so those averages are as continuous as they probably could be.
Absolutely. And what Glenn is saying is the 50-day is more reactive. It will move up and down. And the 200-day obviously has 200 days of data in it. It moves slower. So it is taking a shorter time frame and a longer time frame and seeing if you can glean a crossover is, again, a shorter term to a longer term crossover. Some technicians look at as an indicator of a market running out of steam, not just the market crossing the line,
Interesting.
but the two lines crossing one another. So one way to look at momentum.
Yeah. Next up, we've got the relative strength index. This one's an interesting one that takes into account average gains and average losses,
Right.
and kind of weights them and puts it on a completely separate graph here with the popular boundaries. You can change this as you see fit, but of 70 and 30 on a 0 to 100 scale. And once it crosses those thresholds, can tend to mean that an asset is possibly overbought or oversold.
Right.
And this one, the Forex advantage here would be that over a long period of time, a lot of these markets are mean reverting.
Right.
And so when you say something is overbought in a stock, you could be right about that, or everything could be over the long term going up and to the right. Here, you tend to see that less historically. Doesn't mean that it has to come back in a day or anything, anything remotely like that.
You hit on a key piece of what struggles with. I don't use the RSI. A lot of guys do, though, but it will sit down there longer than you want.
Right.
It's like, okay, why is it's cheap? Why is it reacting? And it can sit there longer than you think. Good, excellent point.
Because even though we see just blips past these 70 and 30 thresholds,
Right.
You could see the price hover around there, or even move past it for long periods of time.
Yep.
But definitely a popular indicator. And the last one to call out here, the stochastic oscillator.
Okay, you've got me.
Yeah, the name alone, we've got this one. And this one, to your last point, maybe gives you a little second data point to compare, maybe pause and wait for second confirmation, because here we've got two lines. We've got a fast oscillator and a slow oscillator. And so the non-dotted line is the fast one and the dotted line is the slow one. And so looking for confirmation of both of those, similar to the RSI, above the thresholds of, in this case, 80 and below 20 to identify shifts in momentum. And this one, I think, is most popular. Perhaps you could think of it within the sessions of the world, within London, Asia, and the U.S., because this one tends to work better in range-bound markets.
Yes.
When things aren't exactly moving through highs.
Right.
And will just remain in that range, helping to identify perhaps as close as you could get to the bottoms and the top within the range.
Yeah, and you can see going back, this week on a short-term basis, there was some interesting correlated points there for both, the Monday low and the rally up on Tuesday. But you go past that and you can see a lot of noise. So you've got to balance. These are tools in decision making. Try things out. And find what you feel comfortable with that adds value. Don't fight them, though. Don't let your mechanics come apart because, the RSI says it's oversold. It's got to bounce. So I'm going to now tag on another 30 pips of risk to my trade. Don't do that. Use them. But I think anything that gives you insight and that gives you consistency and supports your decision making are great things. And as you can see on the platform, you've got between 50 and 100 studies to choose from.
A lot.
I can't tell you what half of them are, but there is. I mean, there's everything from Fibonacci levels to all the things you can do, and I think they become powerful tools. So this is a great walkthrough of ways new traders come. What do I look at? Where do I start? How do I? And we talk about risk management. We've got a great Learn Center about foundational. How do I get into FX? Explaining product, movement, stuff like that. These are all additional pieces. There's no race. I know we've all seen on CNBC the guy who's got 800 lines on his chart. Don't go there. Find what works for you. Try some things out, but don't give away your decision making to the line. Great piece of content, Glenn. Thanks so much for bringing it.
Yeah, of course.
All right, take us out, my friend.
All right, thanks for watching Forex Focus. Up next, we've got Tom, Tony, and Vanetta. Thanks, guys.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade.